Okay, so Bitcoin.
It's been kind of all over the place lately, right?
Up and down sideways,
Yeah.
enough to make anyone a little bit dizzy.
Mm-hmm. So today we're going to try to figure out what's really going on.
Beyond just the price.
We're going to use something called on-chain data.
All right.
And it's kind of like getting a behind-the-scenes look.
At how people are really using Bitcoin.
Yeah, it's like moving from speculation to insight.
Instead of just looking at the headlines.
We can actually look at the transactions on the network.
And use that to try to figure out the why behind the price moves.
Yeah, like what's actually motivating people's decisions.
And to help us kind of navigate this whole world of on-chain data.
We've got the latest The Week on-chain report from Glassnode.
They're like the Sherlock Holmes of blockchain analysis, right?
Absolutely.
Yeah, they're using data to piece together the story of Bitcoin.
And they actually start off this week's report with something that might seem a little bit off topic.
Which is the Fed's recent interest rate cut.
Oh, right.
They cut rates by 0.5%.
Now, I know you're probably thinking.
What does the Fed have to do with Bitcoin?
Right. Yeah.
That's like...
We're suddenly talking about stocks or something.
Well, it's all connected.
Okay.
When the Fed cuts interest rates, it makes investors more willing to take risks.
They're looking for higher returns.
And Bitcoin, volatile as it is
often seen as a way to potentially get those higher returns.
So it's like a domino effect.
The Fed makes a move and then suddenly Bitcoin traders are,
Perking up a little bit.
Yeah, and we actually saw that play out.
Bitcoin jumped back over that 61.9
$1,000 mark.
Which is what Glassnode calls the short-term holder cost basis.
Okay.
Essentially, that's the average price that people who bought Bitcoin relatively recently.
Oh, breaking even at.
Got it.
So,
crossing above that is psychologically important.
Yeah.
It's like, okay, good.
I haven't completely,
Collapsed everything.
Right. And then on top of that, it also reclaimed the 200-day moving average.
Which sits around 63.9.
Okay.
So another good sign.
For Bitcoin.
Okay.
But the report goes deeper than just looking at price.
They introduced this concept of a market gradient.
Okay.
Market gradient. I'm not going to lie, when I first read that.
I thought I was back in high school physics class for a second.
Yeah, it sounds a lot more complex than it is.
It's really just about getting a more complete picture
of what's happening. Okay.
So imagine you're trying to figure out how popular a new restaurant is.
But all you can see is the line outside.
Okay.
Now, a long line could mean the food is amazing.
Or it could just mean they're really slow at seating people.
So how do we tell if the food is actually good?
What's the Bitcoin equivalent of peeking inside the restaurant?
That's where the market gradient comes in.
Instead of just looking at the number of people in line,
we're looking at how much money they're spending.
How quickly tables are turning over.
And whether people are leaving happy or disappointed.
Okay. So
it gives us more information.
Instead of diners, we're looking at buyers and sellers.
Exactly.
The market gradient helps us understand.
Is the buying pressure stronger than the selling pressure?
Oh, okay.
And according to Glassnode,
the market gradient has actually been negative recently.
So that's not a good thing.
Does that mean we're all headed for a Bitcoin buffet line with no food left?
Not necessarily.
This is where things get a little more interesting.
The report actually points out that this same pattern,
this negative market gradient,
also appeared before the 2020
bull run?
Oh, wow.
Really?
Yeah. So while it might seem bearish on the surface, historically speaking,
it could precede a period of significant growth.
Okay, so that's kind of a plot twist.
So we've got negative market gradient.
But also the potential for growth.
It's like Bitcoin is sending us mixed messages.
It's all about understanding investor behavior.
And that's another area where on-chain data can be really insightful.
So we need to figure out who's buying, who's selling.
And why they're making those decisions. Yeah. Let's start with a group that's been getting a lot of attention lately.
Those who bought Bitcoin near its all-time high.
And are now feeling a bit of a pinch.
Okay, so we're talking about those people who bought Bitcoin.
On it was really high.
And now they're probably like,
uh-oh, yeah.
What's going on?
What does the data tell us about them? Are they running for the hills right now?
It's actually quite surprising.
They're holding stronger than in previous downturns. So they're more like diehards.
If you think back to the COVID crash.
Or even the 2021 pullback.
Right.
This time feels different.
Okay, so they're like, hold on for dear life.
What's going on?
Are these new investors just braver than the rest of us or something?
Mm-hmm. Well, it's a little more nuanced than just bravery.
The report highlights a really interesting trend.
Okay.
Which is that these newer investors
are actually experiencing a smaller magnitude of realized losses
than in those past downturns.
So they might be underwater, but they're not selling at a loss as much.
Yeah, exactly.
Interesting. They're holding on tighter because they really believe in Bitcoin.
Yeah, it could be a sign of growing confidence.
Fueled by increased institutional adoption.
Or maybe a deeper understanding of Bitcoin's potential.
Right. It's like they're in it for the technology.
Not just a quick buck.
Exactly.
Okay, so speaking of market sentiment and how investors are reacting.
The report also gets into this whole world of perpetual futures.
Okay.
Which I have to admit, when I hear that, I think of
science fiction.
It does sound a bit futuristic.
It's definitely a more complex corner of the market.
Yeah.
But it's a really valuable tool.
Okay.
So for those of us who don't speak fluent crypto.
Break it down.
Okay.
What are perpetual futures?
And why should we even care?
So imagine you're at a football game.
Okay.
That never is.
And you can bet on which team will be ahead at any given moment.
You're not betting on the final score.
Right.
Just who's currently winning.
Perpetual futures are similar.
They let you bet on the future price of Bitcoin.
Without actually owning any.
Okay, so...
Betting on whether Bitcoin is going to score a touchdown.
Not necessarily win the game.
Exactly.
And by looking at how people are betting...
We can get a read on whether they think Bitcoin's going up or down.
Precisely.
It's like a window into the collective.
Risk appetite.
Of traders.
Okay.
And right now...
The report's showing there's less aggressive betting on Bitcoin going up.
Compared to earlier this year?
So a little less.
Especially compared to January
2023.
To the moon.
Energy?
A little bit, yeah.
It seems like the market's taking a breather.
A little bit more of a cautious approach?
Yeah, like a cautious optimism, maybe.
But it also says that despite that...
Sentiment is still above neutral.
Yes. And that's an important detail.
So while the extreme bullishness has subsided...
There's still an overall expectation that Bitcoin will go up.
Okay, so more level-headed.
Not to the moon, but not crashing and burning.
Right.
Somewhere in between.
Okay, so how does all this connect to those new investors?
That's where things get really interesting.
The report actually highlights a specific chart.
But that compares the behavior of new investors who are actively selling.
Versus those who are holding.
Okay.
And they normalize it against the Bitcoin price.
Okay, before we get too far in the weeds here.
Sure.
Can you break that down?
Of course.
What does that mean?
Imagine you have two groups of people.
Who bought a new gadget when it was at its peak price.
One group is frantically trying to sell it off.
Okay.
Even at a loss.
Because they're convinced it's a fad that's fading fast?
The other group is holding onto their gadgets.
Okay.
Even though the price has dropped.
Right.
Because they believe in the long-term value.
So the people panic selling are like the Bitcoin sellers?
Exactly.
And the people holding onto the gadgets?
Are like these new investors who are just chilling.
And by normalizing this data against the Bitcoin price.
They can essentially highlight when investors are overreacting.
Either with too much fear or too much greed.
Gotcha. So are these new investors?
Exhibiting signs of panic or...
FOMO.
That's the fascinating part.
They seem to be demonstrating a surprising level of composure.
Really?
So maybe they really are onto something.
They're holding strong. They're not letting their emotions get the best of them.
What does this tell us about the overall market?
I think it points toward a maturing market.
It suggests that Bitcoin is slowly shedding its image as this purely speculative asset.
Okay.
And transitioning into something more stable.
More resilient.
Bitcoin's growing up.
Maybe.
But that doesn't mean the ride is over.
There's still one more piece of this puzzle we need to explore.
Okay.
Alongside perpetual futures premium.
Ah, yes.
The grand finale.
Of our on-chain data deep dive.
But we'll have to save that.
For next time.
Stay tuned as we unravel the final layer.
Of this Bitcoin mystery. All right, so we're back.
Ready to finish?
Unpacking this Bitcoin mystery.
We've talked about those.
Yeah.
Intriguing market gradients.
We've looked at how new investors are holding up.
And now it's time for the final clue.
That longside perpetual futures premium?
Okay, so...
The longside perpetual futures premium essentially tells us how much extra...
traders are willing to pay.
For the privilege of betting on Bitcoin going up.
Okay.
You can think of it as like...
a measure of their enthusiasm.
Gotcha.
So a high premium means people are like...
super excited.
Rushing to... Low premium means...
They're a little bit...
more hesitant. A little more lukewarm.
Okay.
Yeah.
So what are we seeing?
What it looks like.
Those days of like crazy enthusiasm.
Might be on hold for a little bit.
The premium has definitely cooled down.
Since Bitcoin hit those highs back in March.
It's actually closer to the levels we saw.
In late 2019.
Early 2020.
Interesting.
Because if I remember correctly, that was right before...
Bitcoin went on a bit of a
Yeah, that's right.
bull run.
We had a pretty impressive bull run after that.
Of course, we can't just assume that the past is going to repeat itself.
Right, of course.
Yeah.
It does offer a pretty interesting comparison.
Yeah,
Like everyone's taking a breather.
but they're not out of the race yet.
Exactly.
Yeah.
Okay, so if we put all this together,
The market gradient.
the new investment,
And now, this futures premium.
what's the overall picture?
I think the big takeaway here is that,
We're seeing a shift toward a more mature Bitcoin market.
okay,
You know, there are definitely signs of a slowdown,
like that negative market gradient
Right.
and that cooling futures premium.
but there's also underlying strength.
New investors are holding from.
And the market seems to be
A
acting.
bit more rationally this time around.
So less driven by hype, more by...
Fundamentals.
Exactly.
Like
It's
Bitcoin's finally...
growing up a little bit,
Maybe?
right? It's trading and it's
Party hat.
for a business suit.
I like it.
But even mature markets have...
Ups and downs.
That's right.
Right.
So the question is,
Can this new and improved Bitcoin
yeah, can it weather the storm?
weather the storm? Exactly.
Especially when we think about
And especially those storms.
that are brewing outside of just the crypto market.
Right, like regulations,
Exactly.
global events.
Things we can't necessarily predict.
Right, and that's an important point to remember.
Because everything we've been looking at today
Yeah, all this on-chain data.
is on-chain data.
It's what's happening on the blockchain.
It doesn't necessarily reflect everything that's happening
Right.
in the wider world.
So for our listener,
Who's been on this journey with us?
what's the big takeaway here?
I'd say
Don't just look at the price of Bitcoin.
try to understand the why behind it.
Okay.
On-chain data can give us some really valuable clues
About how investors are feeling.
and where the market might be headed.
But we also have to remember to keep an eye on the bigger picture,
The big picture.
all those external factors.
It's like,
We need a healthy dose of data,
but also a little dash of,
real-world awareness.
right, a little bit of intuition.
There you go.
Well, this has been a fascinating deep dive.
I feel like we've learned a lot.
Me too.
Hopefully you,
At home,
our listener.
feels the same way.
And until next time, happy investing.